New car dealers are the last family-run stores on Main Street, but the estate tax threatens the future of the family business and the jobs of everyone on the payroll.
This tax can be crippling to a family. That puts people out of business.
Ed Tonkin's grandfather started the business after World War II. Now Ed's daughter Nancy prepares for a leadership role. But sometimes dealerships perish with the owner because of the estate tax.
We've had cases with dealers that have had to sell off dealerships just to pay the government.
When dealer Ezra Galpin died 10 days after being diagnosed with leukemia in 1992, the estate tax owed jeopardized the future of the business he and son Greg literally built from the ground up.
20 years ago, I could have given up.
Did you think about it?
I thought about it a lot.
Employees worried about their future. The banks worried about their loans to Galpin Ford.
The only one that wasn't worried was the Internal Revenue Service.
As the family mourned, Greg faced hefty estate tax expenses.
We were in the 300,000 range.
The estate tax put the business on life support.
It took about a third of our operating cost away, and it put us behind competitively. I think government needs to understand when you take that kind of a piece out of a business, a family business, they can't expand, they can't buy equipment. Things come to a screeching halt. When you have limited cash flow, it's hard to put cars on the lot.
So there's fewer new cars to sell.
You have limited selection, consumers want selection, so your sales start dropping off.
Fewer new car sales meant fewer trade-ins to put on the used car lot.
Salesmen don't have things to sell.
Even when he took in a trade, he often couldn't afford to keep it.
If you don't have the cash, you can't keep the trades.
So instead of making a nice profit by retailing a trade-in, he had to sell it for a lot less at wholesale, all to get quick cash just to meet payroll. Less cash also limited what he could buy at the auction.
And so your selection goes down.
With the future in doubt, some key employees quit.
They want to have a sound future, so we ended up losing a few of those that were hard to replace. We lost several salesmen.
Fewer new and used cars meant fewer commissions.
They can't make any money.
And when he couldn't keep the trades, the store couldn't profit from reconditioning them, and service tech income suffered. Bob Eckert stuck it out during the lean years.
Hey, Bob.
He still works in the service department. Warranty Administrator Sarah Dennison was also part of the comeback team. So was Ford Motor Credit, which loaned him money when nobody else would, funds that gave Galpin a chance.
Over the next 10 years or so, we finally dug out a hole, and it was a deep hole.
As for the tax bill from the IRS,
they'll give you their easy payment plan, which isn't real easy.
The estate tax was a job-killing nightmare for Galpin Ford, one Reichert Ford hopes to avoid. The family's message for Washington?
Make sure that it makes it cost feasible for us to pass this business on to the next generation, to operate, to produce, to continually grow the business and produce more and more jobs.
Reichert's father opened the business in 1953. Today, Red and his brother want to preserve it for their children and protect the paychecks of 380 workers.
We can't penalize people for building and creating jobs, and that's what it does if you don't have proper estate taxing.
Reichert's congressman agrees and said so during a recent visit to the store.
We don't think you should penalize that success. We think we should zero out the estate tax, eliminate it, put it to death, but not everybody agrees.
What virtually everyone in Washington agrees on is there needs to be permanent estate tax reform. That's what New Orleans dealer Troy Duhan wants for his dealership family of 600 employees.
Give us a number that's fair and make sure that it stands the test of time. Don't allow it to change every administration.
The estate tax hinders current job growth. How? To protect their business, dealers pay hefty premiums for life insurance every year.
This is money that could be better used in the community, could be better used for job creation in the dealership, which is what this country sorely needs.
Tell your members of Congress estate tax reform should preserve and create jobs. And, says Representative T. Berry, dealers should make it personal.
They need to tell their story. I mean, their story is a personalized story of how their business operates, how it started, how they're going to keep it going, how the family's involved in the business. They just need to tell their personalized story and what the return of the estate tax to 2001 levels means for them in terms of their planning and their future as a business.
Ezra Galpin first sold Fords in Buckeye, Arizona. In 1984, he and Greg took their first delivery at the new store in Prescott. From the beginning, the elder Galpin hoped his son would carry on the business. Greg has the same dream.
Dad's hoping he can pass the torch. My son's in the business right now, going to college, getting his automotive business degree. Hopefully, at that time when I end up going, that Things have changed on the estate side. If it were to happen today, it would devastate the company. There would be no going on. It would be a shut the doors down or sell the business. You know, you work this long and hard to try to build it up, to provide for all the employees, and to have the rug ripped out from underneath you is just a shame, especially in this country.
Contact your members of Congress and tell them that a permanent estate tax solution will protect jobs now and in the future.